An IPO, or initial public offering, is like a company's grand entrance into the stock market. It's a significant milestone that marks the transition from being a private entity to a public one. Imagine a private company working hard behind the scenes, deciding to let everyday investors buy a piece of their business. That's an IPO. It's a moment of transformation where the company opens its doors to the public. They offer shares to the public for the very first time. Why go public? Companies have big dreams. They envision growth and expansion that requires substantial funding. They might need capital to expand, pay off debts, or invest in new projects. This influx of capital can be the key to unlocking new opportunities and driving innovation. Going public is like throwing open the doors to a huge pool of potential investors, giving them the fuel to achieve those goals. It's an invitation to the world to join in their journey. It's a chance to grow bigger and stronger. The company can now leverage the public's investment to scale new heights and reach new markets. Think of it like this. A local bakery, famous for its delicious cookies, decides to go public. They want to share their success and expand their reach. They're raising money to open new stores across the country. This expansion means more people can enjoy their cookies, and the business can grow exponentially. Now everyone can invest in their success and enjoy a piece of that sweet, sweet pie. It's a win-win situation for both the company and the investors, creating a shared path to prosperity. Going public is a big step for a company, like climbing a mountain. It's a journey filled with challenges and triumphs, requiring careful planning and execution. First, they need a guide, an investment bank. These experts are crucial in navigating the complex terrain of the financial markets. These financial experts help determine the initial share price and manage the IPO process. They analyze market conditions, assess the company's value, and strategize the best timing for the launch. It's like hiring a Sherpa for your mountain expedition. Just as a Sherpa guides climbers through treacherous paths, investment banks lead companies through the IPO journey. Next, the company files a prospectus with the Securities and Exchange Commission, or SEC. This step is crucial for regulatory approval and investor confidence. This document is like a company's resume, outlining its financial health, business model, and future plans. Transparency is key. Investors need to trust the company's vision and potential. Then comes the roadshow, where the company pitches its story to potential investors. This is a critical phase where the company showcases its strengths and growth prospects. Think of it like a promotional tour, drumming up excitement for the IPO. The goal is to generate interest and secure commitments from investors. Finally, the big day arrives, the IPO launch. This is the moment the company has been working towards, a culmination of all their efforts. The company's shares are available on the stock exchange, ready for trading. It's a new chapter filled with opportunities and challenges as the company embarks on its public journey. So, you want a piece of the action? The thrill of investing in a company's initial public offering can be quite exhilarating. Applying for an IPO is easier than you might think. With just a few clicks, you can be on your way to owning a piece of a new company. First, you'll need a brokerage account. It's your gateway to the stock market, providing you access to buy and sell shares. Once you've got your account set up, it's time to find an IPO you're interested in. This is where the fun begins. Keep an eye on financial news, brokerage platforms, and IPO calendars. Research is key. Understanding the company's potential can make a big difference. When you find an IPO that piques your interest, it's time to submit an application through your broker. This step is crucial. You'll specify how many shares you'd like to purchase. Be realistic about your investment goals, but remember, demand can be high, so you might not get the full amount you request. Stay patient and keep an eye on your investments. Section 4. Boosting your allotment chances, tips and tricks. Want to increase your odds of getting those coveted IPO shares? Here are some insider tips. Firstly, a strong relationship with your broker can be beneficial. They often have insights into allocation strategies. Secondly, consider participating in multiple IPOs. By casting a wider net, you increase your chances of securing an allotment in at least one. Remember, diversification is key in investing. Finally, maintaining a well-funded brokerage account demonstrates your financial capacity and commitment to investing. It's like showing up to the IPO party dressed to impress. Section 5. Weighing the risks and rewards, IPO investment. Investing in IPOs can be exciting, but it's not without risks. Remember, you're investing in a company at its earliest stage. Their future performance is still uncertain. One risk is volatility. IPO prices can fluctuate wildly in the initial days and weeks. It's like riding a roller coaster. Additionally, there's limited historical data available to assess the company's long-term prospects. However, the potential rewards can be substantial. Early investors in companies like Amazon and Google have reaped incredible returns. IPOs offer a chance to get in on the ground floor of potentially groundbreaking companies. Section 6. IPO Success, your guide to the finish line. Navigating the world of IPOs might seem daunting, but with the right knowledge and approach, you can confidently participate in this exciting market. Remember to conduct thorough research, understand the risks involved, and choose IPOs that align with your investment goals. Keep in mind that investing in IPOs is a marathon, not a sprint. It's about identifying promising companies with long-term growth potential. So, stay informed, stay patient, and who knows, you might just hit the IPO jackpot.